Bank Negara Malaysia is expected to tighten its overnight policy rate by another 25 basis points for the fourth time in a row tomorrow. We speak to Benedict Weerasena, Research Director of Bait Al Amanah, about the implications of this move.
The important thing is also to understand the context of it, that it's not just about raising the OPR, but it's a normalization of monetary policy. What does that mean is that it's basically raising it to pre-pandemic levels, to the pre-pandemic level of 3% in 2019 pre-pandemic, and second half of 2019 to be specific. And so raising it to 2.75, I think there's a possibility that it will be raised another 25 basis points early 2023 to 3%, and probably from then on, it will be maintaining that 3% basis points, which is the pre-pandemic 2019 rate.
Benedict also discusses whether the rate hike can effectively tame inflation and if more can be done ahead of concerns of a global recession.
So high OPR is known to reduce the amount of money in circulating in the market. Theoretically, this is expected to discourage private investments and consumption. However, this process is not automatic. Two reasons. One is due to time lag between decisions and the effects. Not only that, it really depends on the economic momentum of when the impact takes place, or whether we are still towards an inflationary cycle or not. Second, also, it's not automatic. This whole process is not automatic due to other factors that might contribute to investments and consumptions. For example, let's talk about investments. It's also affected or determined by profit expectations, not just interest rates. So at the end of the day, what I would suggest that it's not just about monetary policy when it comes to taming inflation, but it's also very much dependent on fiscal policy. In other words, fiscal policy needs to align as well to tightening monetary policy. Simply put, the government needs to cut spending. And why is this so? Government expenditure has always been based on borrowing and money printing, and this is strongly inflationary. So in other words, if the central bank is trying to control inflation by raising the overnight policy rate, but then government still spends and executes an expansionary fiscal policy, then the effect of tightening monetary policy won't be as effective as arranged or as determined.